Financial year 2021-22 was the best of times for the capital markets, with 51 IPOs raising a record-breaking 1,20,670 crore. But it was also the worst of times, with a massive erosion in some of these stocks. While 32 of the newly listed stocks added roughly rupees 34,327 crores to investors' wealth, 19 of them fell below the issue price and wiped out rupees 24,582 crore. Net of the losses, the enormous amount raised during the year added less than rupees 10,000 crore to the shareholders' wealth. This year also witnessed Paytm IPO, the biggest issue in the history of Indian capital market. But it also saw the biggest wealth destruction when Paytm shares crashed 75% from the issue price, eroding almost 14,000 crore of investors' wealth. There are some interesting numbers. In the past 10 years, 543 new stocks got listed. Out of that, 62.2% of these have stopped trading. 3% have dropped more than 80%. 6 have turned penny stocks priced below 10. 4 have dropped 50 to 80%. 15 are trading below issue price. And 10 stocks are less than 10% up. To understand all of this and to figure out what are the red flags while applying for the IPO, we have with us Mr. Babar Zaidi, editor ET Wealth. Thank you for joining us. Please tell our viewers, while there is such a interest about IPO market, what are the certain red flags that one should go through while we are trying for an IPO?
Thank you for having me here, Saurabh. First of all, the IPO market is not one single market. It is not what you can say the IPO market. Each stock has to be identified and assessed individually. As we have seen in the past 1 year with the stocks that came out, some of them have created value while others have eroded value. So don't treat all of them as one. Yes. There will be some good stocks, there will be some bad stocks. Each has to be assessed individually.
What is the first thing that you would like our viewers to note while assessing this?
The first thing is to look at what is the valuation of the stock. Paytm IPO was obviously very overpriced, and some of the analysts had pointed this out very clearly. Paytm did not have a clear route to profitability. It was in deep losses, and not only that, there are other companies which are in losses which might become better investments in the years to come. Amazon, for example, it stayed under for a long time before it became the blue chip that it is in America. Paytm had no clear visibility of coming into profits. So obviously it was an overpriced issue. Investors were paying very high price for what will eventually not become a profitable venture.
Many people have this FOMO mentality. They don't want to miss out, especially the new age investors. You've also written in your article in the ET Wealth that people should not rush to invest. Would you like to explain a bit more on that?
Yeah, each stock, every stock is buyable at any price. I mean, you don't have to just buy in the IPO price itself. In fact, what we have seen is that it's better to wait and watch before and see how a company performs before jumping in. Okay. Now, it has been observed that at the fag end of a bull run, a lot of low quality and high priced issues come out, which is happening right now. I'm not saying that all issues coming out right now are bad, but they are obviously overpriced. So, I mean, we have seen that price of a share often falls below the issue price. And then there is always an opportunity to pick it up at that price. So Tomato, for instance, opened up almost 100% higher than the issue price. Now it is close to the issue price. I would advise people and investors to hold on, look at how the company will perform, and then get into a company. Yeah. Now, I'm sure IPO also can be very rewarding, as we have seen in some companies. At the same time, they can also erode wealth.
You have also written about one should find out how the company is performing by looking at where the money is going.
Always look at who is raising the money. Now, there are two ways when there's an IPO where the money is being used for the company, which is being used to issue new shares, and the money raised is used by the company to grow, expand its operations. On the other hand, there is an OFS, offer for sale component in an IPO, where existing investors, the PE investors and VCs who had put in money into the company, they invested in it. Now, they are looking for an opportunity to cash out. In Paytm, 10,000 crore, that is 55% of the issue, 55% of 18,300 crore was OFS. Angel investors who had put in, and anchor investors who had put in money in Paytm were wanting to get out. If it was such a great opportunity to make money and such a long-term Eldorado, why did they want to get out? It's a simple question that needs to be asked. The 10,000 crore is OFS. Somebody wants to sell you at 2150. Why? You can't blame anchor investors and angel investors for wanting to get out. They are seeing value, so they want to get out. You can't hold it against them. Thing is, the investors who are getting in should try and first understand that why am I paying 2150 for a company which is incurring heavy losses, and there's no clear visibility of profits in the near future.
You've also talked about the listing gains. Many people try to rush into the IPOs.
As I just explained to you, the listing gains can be ephemeral, and the same goes for listing losses. A company may open in the red below the issue price and then zoom. L&T Infotech, it's a prime example. On the other hand, there are companies which opened spectacularly up but are now in the red. Policy Bazaar. So don't go by the listing gains, and don't go into the feeding frenzy that happens immediately after an IPO opens. Wait, hold on, hold your horses. The IPO market and the stock market is not a casino. Yeah.
You have also talked about one more thing in your article, which is about one should be willing to review.
When you enter the equity market, don't treat it as a one-stop thing that, okay, now I've invested and I'm going to hold this forever. It's a good thing to be holding a stock forever. But if the ground situation has changed, you got to open your eyes to it and make changes in your strategy. I mean, there was a time when idea was showing promise.
Yes.
Now it is in the dumps. Similarly, I mean, look at the Paytm thing. It came out with certain plans in place. 2 weeks or 3 weeks later, there was some development where the RBI took some action against it and stopped it from onboarding new clients. There was also a report about how its payments bank business might be in jeopardy. So that changes the whole scenario for Paytm. So you got to relook at the stock under the new light. If things have changed, so should your plans for the stock.
Thank you so much, Babar sir, for explaining it in a simple manner. It was
Thank
a
you
pleasure talking to you. We'll keep doing more videos like this.
Thank you very much, Saurabh.